Good morning and welcome to today's morning report on Friday the 7th of August with me, Richard Perry, market analyst at Handset Markets. It is non-farm payrolls Friday and the markets are a little bit mixed actually. Usually you see on non-farm payrolls Friday there's a fair amount of consolidation in front of the report that gets announced at 1:30 UK time. However, there's sort of a mixture of movements really. The forex markets are basically flat. I mean the dollar index that has been sort of buzzing around recently is just slightly lower, and that's because the euro has ticked higher a little bit today. And that slight decline on the dollar index has helped to support the commodities prices today. Oil slightly higher, bit of a rebound in gold as well, not too significant though, and I'll talk about gold in a bit, but that oil price rebound is basically just within this big downtrend really, nothing too significant there. It continues to fall away. Rallies are a chance to sell, I still believe. So what we have seen across the equity markets actually is a slight bit of weakness really. The DAX has fallen away, and that sort of come with the weakness that we saw in the US last night. Wall Street closing down. Media stocks or the media sector generally has not come out with too much positivity in terms of earnings. Viacom, 21st Century Fox following Disney's poor example of earnings this week has put pressure on the media sector, and that's dragging the market lower. Wall Street closing negative 0.8% on the S&P 500. Asian markets broadly flat, not too much direction there overnight. You had the BOJ coming out again standing pat, and with no real change to their forecasts. It's basically sitting on your hands over to the Fed really. In terms of how that is going to impact on markets today. So non-farm payrolls is the big focus. 223,000 is the expectation for the headline number. Let me just show you that. Non-farm payrolls 223 is the expectation, which is bang in line with last month actually, interestingly enough, but trying to look past the headline data and look towards more at the revisions for prior months, and also other aspects of the payrolls report which are more important, I think, to the Fed's thinking. Certainly things like average hourly earnings, which are again forecast to come in at 0.2, although I say again, actually last month it was flat, 0.0, but 0.2% on the month would be basically continuing this average year-on-year data of around about 2% earnings growth, so still no pickup in the earnings growth if that is the case. Also look at stuff like the participation rate as well. Labour force participation has continued to fall back to 62.6, which is a multi-year low on the labour force participation. Ideally you'd want to see that pick up. But unemployment is forecast to stay around 5.3%, which is not too far away from the Fed's prescribed level of sort of full employment that it sees between 5 and 5.2%. So it's interesting that that continues to remain in the case. So a lot going on, and a lot could be taken from this payrolls report, and generally tend to see a lot of volatility in the wake of the payrolls report. So that should be seen this afternoon. Now, my chart of the day today is the euro yen, and euro yen is up and looking to challenge this key resistance once again. I've got it at 137 figure because that is there or thereabouts what it is. 136.95 if you're going to get exact is the was this sort of breakout level. But look at the support of the 89-day moving average now. If I zoom in here, you can see that it's providing the support on the lows, and that the latest one is 134.95, which was the low from Wednesday, which was marked the bottom of a big turnaround actually. A nice strong bullish candle which has continued yesterday and into today, and that's certainly improving the momentum indicators, and it looks like it's building for a test of this 137 level. That 137 level has been tested on several occasions in the last month and failed, so that is obviously the big resistance overhead. Now this is the hourly chart. Now I've got in on this hourly chart this sort of pivot level at 136, so between 136.30 and 136.40 really. The old resistance from early July from late July, and then became supportive, and now since then has basically been resistance, apart from that little spike that we saw last Friday. Yeah, I still think that this is a key level near term to look out for, and what we've seen in the last hour or so is that breaking higher, and it'll be interesting to see if it starts to find support around that 36.40 level again, because I think if it does that, then we could start to creep back towards 137 figure. I think there's no real direct impact from payrolls on this pair, because obviously it's not a dollar pair, but there could well be a risk-related impact on it. So if it's a positive payrolls number, you could well see the euro benefiting on the back of that, with the safe haven yen coming under pressure. So we could well see a test of 137 on a strong payrolls report, but it certainly looks like it's building for that way anyway. And 137 is the barrier. Above that, you're looking at obviously that 137.75 level, which was the spike high that we saw sort of early mid-July, and then that sort of takes you back above the 138 region, which is a trading range between 138 and 141. So if it does get above that 137 figure and hold the break on a closing level, that would certainly be a bullish move. So I wish you good luck in your trading today, and in front of non-farm payrolls, and I'll speak to you later. Thank you.